Latino with Mary Kay and Teresa. So we just found an Indian restaurant right in the middle of Lisbon. So let me show the name of the restaurant here. It is Nessa. See here? Here are, so this is Nessa restaurant right in the middle of downtown Lisbon. And look how it looks like here. Those two guys, I know one of them. They are from Punjab city, Jalandhar, and Amritsar, and I just started. And it seems to be awesome because they are out. Paneer is going to be served. We are hoping it's going to be good thing. Here you go. All around. Good decor. My friend Sarah is at this expo. Okay. I think the expo has ended actually, and we're all winding away. Today was the best day of our life. I wish I could shout loudly here. I'm so excited. But shouting loud means someone is going to drag me to the police station, saying he's crazy guy in Lisbon, right? And Mary has had a nice pet. Look, Lisa is having a nice pet. Okay, so this is Mary. And that's mine. Hello, this is Paul Chima, sales representative from Remax Profession in Toronto, Canada. The regulators have made changes to control how the federally regulated institutes, which we call as FRFIs, will finance the home purchases. Already, the market has shifted in a very big way. Home buyers were betting on the prices falling down further, while sellers were expecting the price to go way higher. So what will happen after these changes come into force? Betting on the prices. This is something we need to understand. I'm pretty sure this is going to help you plan your home purchase and sale. These new changes affect everyone in a very big way. A huge hype is being created in the media, and it has definitely caused a lot of confusion among home buyers and home sellers. To cut through the noise being generated online and to better understand these changes, we have a highly experienced mortgage industry professional, Lucy Gagliardi. Lucy is a mortgage agent with the Mortgage Centre YourMortgageYourWay.ca. She specializes in providing in-depth knowledge of the finance industry. She helps you understand your financial situation and then creates a highly customized solution. Recently, she helped many home buyers close their transactions when many deals were falling through. Welcome and thank you very much for coming over to discuss the hot topic, Lucy.
Thank you very much for having me, Paul. It's a pleasure to be here today.
Wonderful. So, Lucy, tell us what changed in the mortgage industry.
So there have been 3 significant changes that have been implemented that will affect new home buyers directly. The first is the regulators have eliminated bundled mortgages.
Mm-hmm.
The second change is lenders are scaling back the loan to value on higher valued homes. And the third change, which is the one that affects most of us, actually it affects everybody, is the banks or federally regulated financial institutions are now harmonizing the stress test, which means that everyone applying for a mortgage now has to qualify at the higher of 4.89% or 2% above the mortgage contract rate.
So what are the reasons of such changes? Why now?
Well, the latest rule changes are intended to reduce the risk of mortgage defaults and to slow household debt accumulation. Now, what effect that will have on the housing market is yet to be determined. While the rules definitely make it more difficult to qualify for a mortgage, the regulators have been implementing tighter regulations since 2008. And while we know how that's gone, it really hasn't affected the market as of yet. That's not to say it won't affect the market now,
Yep.
but historically, the tightened guidelines that have been implemented haven't had the effect that the regulators hoped they would have. But with that noted, again, these most recent changes are the most groundbreaking changes to have ever been implemented. So we shall see what happens.
Wonderful. So you talked about the bundled mortgage eliminations. What exactly is that?
Basically what the bundled mortgage regulation is previously if a client didn't have, or if a consumer didn't have enough of a down payment, we would be able to place a second mortgage behind the first mortgage. So,
Okay.
for example, let's say a client had a 20% down payment,
Yes.
but the financial institution or the bank is only willing to lend them up to 70%
Loan to value.
loan to value.
Okay.
The client would be required to have a 30% down payment.
Yes.
If they only have 20%, what we would do is we would place a small second mortgage behind the first mortgage, and the client would now have everything that they need to fulfill the purchase. Unfortunately, as of January 1st, we're not going to be able to do that anymore. So the banks, if the bank says that they're only going to lend 70%, we cannot exceed that 70% loan to value, and the client would then have to basically come up with the extra 10%.
What's the next change you talked about?
So the next change is that lenders are scaling back the loan to value on higher valued homes. So on higher valued homes at this point in time, most lenders have what's called a sliding scale. So a sliding scale basically determines what amount of down payment you need to have.
Okay.
So any mortgage above $1.2 million requires the portion above $1.2 million requires a down payment of 50%. So from 0 to $1.2 million, you'll have a 20% down payment.
All right.
Any portion above $1.2 million will have a 50% down payment.
Wow.
So assuming we have a purchase price of $1.8 million, any portion
Yes.
above required down payment for $1.8 million would be $540,000.
Okay. So 20% up to 1.2.
That's right.
And from 1.2 up to 1.
Whatever.
Right?
Yep.
There's
1.8 or
50%
2
of that
million.
difference.
Yeah, that's right.
Yeah. Okay, good. And then there was another one too. The last one.
The
I'm
other
trying
one,
to remember those things.
it's all good.
Yeah.
So the last one, I'm sure, has been all over the media, and it absolutely has the largest impact on consumers in general. And that's basically that federally regulated financial institutions, or banks, are now harmonizing the stress test. That basically means that everyone applying for a mortgage now has to qualify at the higher of 4.89% or 2% above the mortgage contract rate. Say we're buying a house and we have 30% down payment, 25%, anything in excess of 20%. What we, of course, and I do think that I don't think there's going to be a frenzy. I do think that there are going to be people that are really getting into, looking to get into the market as quickly as possible.
Yeah.
Do I think that it's going to cause any serious ramifications to the market? Quite frankly, we haven't seen crazy circumstances over, the last 9 years since 2008.
Yeah.
Since all of these regulations, or the regulators have been trying to make the changes and trying to, I don't want to say they're trying to slow down the market. I do think personally that is a motive, but do I think this is going to affect the market in a way where it's really going to bring it down? Not to the degree that everybody fears. I really don't think. I think that it's going to have an impact, but I don't think it's going to have an impact where it's going to crash our market.
Well, whenever government interferes in the free market, all it does is inject fear.
Mm-hmm.
So when it injects fear in the market, everything goes like topsy-turvy. People don't know what they're doing. They're confused.
And that's why it is of the utmost importance right now for you to consult with your mortgage professional. I'm happy to help any way that I can. Paul is a rocket science at this as well, is a rocket scientist at this as well. But consult with your professional, your mortgage professional, whether it's your bank or a mortgage agent or broker. It's imperative for you to understand exactly where you fit in this market. And I think that those are some of the things that are going to happen as well. We're going to figure out a way, as we have, again, for the last 9 years, we're going to figure out a way to maneuver our way around this and try to get as many people into the housing market as we can.
So is there any cutoff cutoff date that any approval after this will not be honored? Like, could it be till midnight or a day before these regulations come in force?
That's exactly what it is, actually. So as long as we have an approval prior to December 31st, and your closing date is within 90 to 120 days, my apologies. Once again, that's 90 to 120 days, and that is lender specific. You'll be fine. So again, I'll just reiterate, the approval has to be in prior to December 31st, and the closing date has to be within 90 to 120 days, depending on the financial institution. But again, your mortgage professional will be able to tell you specifically what those dates.
So when Lucy says that all the firm approvals till 31st December will be considered under previous regulations, that doesn't mean you file your application on the last day. It has to be a firm approval. I'm just quoting her words. Firm approval in place on 31st December 2017. So you need to act way earlier on this application process,
Yes.
right, Lucy?
Yes. Yes.
So anything else you want to add?
Just really get out there, talk to your real estate professional.
She does amazing work, like I said before.
Thank you.
When every other deal was falling through, she did let me close some transactions. So I'm strongly recommending her for all your mortgage needs.
Thank you so much for your kind words, Paul. Thank you for the opportunity to RTGAGECENTRE.com.
So don't text her, call her. She hates text. I'm kidding. You can text her
Please
too.
call, text, email. You can also check out my website at www.lucyknowsmortgages.com.
Wow, that's an awesome website.
Thank you.
So better call Paul, LucyKnowsMortgages.com. Thank you very much for watching this clip. Your views, your comments are most welcome on this video. Please like our channel and we'll be thankful to you, and you will get all the latest clips when you subscribe to our channel. Thank you very much.
Thank you.